morning. Another vlog for capital raising capital, capital investment strategies for hedge funds, private equity, venture capital. Wanted to leave you guys with a bit of a headline that I read the other week. It said large managers get the money, smaller managers provide the performance. Again, I'll reiterate that for you one more time. Large managers are getting the money, the smaller managers are giving the performance. These are the numbers. 2020, as compiled by Pivotal Path. Pivotal Path is a analytics firm based out of the States that compile a lot of information on hedge funds, return, size, strategy, a lot of different breakdown of that data. So according to Pivotal Path, managers with less than 100 million of AUM, 2020 year to date, I think that's through September, we're up 10.6% year to date in 2020. Managers that were in excess of 5 billion on average were only up 1.3% year to date. That is a difference of 9.3%, y'all. So what that basically says is, despite money flowing to the large managers, those guys are mainly a beta play. They're not getting the performance. And so we really need to look at how we change the thoughts on allocators to where they can allocate to the smaller guys. So I know there's a lot of emerging manager programs that are being developed, things of that nature. I think that helps, right? So again, those larger managers, mostly a beta play. A few exceptions to the rule. We're thinking on a relative basis, the smaller managers are continuously getting smaller and smaller, right? That's just because the larger players in the game are just getting bigger and bigger. So the bigger guys, they just can't do it. They can't perform the way that a smaller manager is because we're more nimble. The boutiques are able to get in and out of trades and be able to take that alpha off the table and return it back to you as shareholders. You also have, in the smaller managers that are putting up a lot of alpha, there are strategies that are capital constrained. Right now, obviously, there are a few that have scale and size is actually favorable, and I'd say that is distressed, right? Like you take an Oaktree as an example. Oaktree's a well-known distressed manager, and they have scale. Private equity also has scale. Quant, right? Think about Renaissance Capital. Other managers like that. Size is not prohibitive to the returns. CTAs, right? Winton would be another example of that. However, if you're long short equity, if you have a niche within like the TMT sector, or you're doing something different on a relative arb play, etc., that's where you need to have the smaller managers that are delivering this performance. Again, I'll reiterate that number, 2020, under 100 million, 10.6% year-to-date return versus 1.3 for those that are over 5 billion. I mean, the number's right there, 9.6% spread year-to-date. Hopefully, to wrap this up, there'll be a time when a lot of the allocators, and if any of you are listening, think about the emerging manager programs. Think about the smaller managers and realize that you're missing out on the better returns. I know there's more work, more diligence, things that need to be done on that side, but I think the returns will be worth it. Beating your benchmarks and possibly paying lower fees. As a smaller boutique fund, we can offer better clawbacks, hurdle rates, things like that, where maybe some of the larger managers just aren't interested in thinking about that. So we await the day where, again, you allocators realize thinking more about boutiques, thinking about the smaller guys, get your returns. Obviously, maybe some performance fees will be a little higher on the backside, but you're going to be generating alpha and getting delivered alpha and not paying up for beta. And I'm always happy to have that fee discussion. Maybe that'll be the next video. Anyway, please hit the like button for the YouTube algorithms, subscribe, hit the bell so you get notifications. My name is Jeff Altanaga. I'd love to work with you, talk to you, network with you. Reach out, put comments below. There's also a link to the website. You can send me an email. That's contact information. Again, I'd love to be able to chat with you more on capital raising, compare notes, all that other good stuff. Bye for now. Have a good day, night, wherever you are. Make it a great week.